Hi, I'm Jenny Brown. Welcome to this week's MFB News. I hope everybody has had a wonderful week and you are keeping cool in this very, very hot weather. I can't quite believe that the heat wave's going to end just in time for the weekend. But I hope that most of you at least have managed to get out and enjoy some of this glorious sunshine before it disappears again. So look, we've got lots of great stuff to cover off with you this week. We're going to be talking about what's been going on in the lending market. Obviously, we're going to cover off the fact that we've seen a base rate increase, what this is going to mean for you guys as well. And then we're going to talk about the latest on the Renters Reform Bill, information that's been published in the last few days. So continuing with the theme of absolutely epic numbers of lenders repricing on a weekly basis. And for some lenders, it's not only weekly, it's twice or even 3 times weekly at the moment. We've seen another flurry of rate increases, which won't come as a huge surprise to you. We know that base rate went up by 25 basis points yesterday. I feel actually, incidentally, that we got off quite lightly. The Fed went up by 75 basis points, an unprecedented increase over in the US. So 25 basis points by comparison actually feels relatively gentle by comparison. So look, in terms of what we've seen the lenders doing in the last weeks, we've seen rate increases from NatWest, the Mortgage Works, Fleet Mortgages, West Bromwich, their rates went up by 35 basis points. Precise Mortgages, Visa, have increased rates by up to 20 basis points. We've seen the Coventry put up some of their pricing. Leeds have made increases of up to 61 basis points. Pepper have made increases. Virgin have made increases of up to 20 basis points. Foundation Home Loans, Skipton, and also Zephyr have increased rates by up to 50 basis points. So another flurry of repricing going on there. So where does this leave us now? I like to do this every week, so we've kind of got a benchmark about where things are headed. So pricing just now for individuals on standard properties, 2-year fixed from 2.15%, 5-year from 2.25%, 7 from 3.6%. It's a bit of an outlier, I'll come back to that. 10-year fixes at 2.45. The reason I say 7-year fixed rates are an outlier is just not many lenders offer them. 7-year fixes, until actually I think probably in the last 12 months, have been relatively not available in the mortgage market, just because there's been no real appetite for them. Traditionally, we always go 2, 3, 5, 10. One lender bought out a 7-year fix. Actually, some people kind of liked it. You know, it's longer certainty than 5, but 10 feels like a really long time, so 7's a good middle ground. Also, some of the 7-year fixed rates only have an ERC for 5 years as well, so you benefit from that slightly elongated fixed rate period, but you're only committed as if you were in for a 5-year deal. So 7-year fixed rates, there just aren't that many of them available in the market, and it just so happens that the lenders who are offering them tend to be the more specialist lenders. So whilst we're referring to rates available for individuals on standard properties, these lenders, the lenders who lend on specialist properties and to limited companies also do straightforward stuff, and these are the guys who happen to offer 7-year fixed rates, hence the higher pricing. A limited company pricing is, moving on as well. So 2-year money 2.44, 5-year from 2.79 now, 7-year fix from 3.6, and 10-year fix from 3.8. I actually think that sounds quite good. 10-year fixed rates from 3.8% in the specialist end of the market, and the lender offering that 10-year fixed rate or 10-year fixed rates at that kind of price, incidentally, is the Yorkshire Building Society. Now, they're a really interesting lender because they are a commercial lender who does buy-to-lets. So what you find with these guys is there is an incredible level of understanding for complex deals, so layered limited companies, complex share structures. They can do larger HMOs, blocks of flats, all the kind of more quirky stuff that some of the more high street specialist lenders to the likes of the Mortgage Works, Precise, those kinds of guys maybe wouldn't want to get involved in. So to see them offering a 10-year fix at 3.8 actually for me is quite interesting. So look, the other thing I really want to just say to you about interest rates this week is that we've had the Bank of England base rate. So today's Friday, it went up yesterday by 25 basis points. On Wednesday evening, when people were like, okay, the Bank of England are meeting tomorrow, so I need to, be worried about interest rates going up. And also yesterday afternoon, we had a kind of tsunami of people phoning us up saying, I think base rate's going up, I want to, remortgage my property, lock into a new deal. And I think it's really important just to kind of explain that base rate and fixed rate pricing in the mortgage world are not inextricably linked. There's absolutely a connection in terms of behaviours and direction of travel of pricing. But just because base rate goes up on the Thursday, it doesn't mean that lenders' fixed rates also go up on the Thursday or the Friday. lenders are generally pricing their fixed rates off of swap rates, which are essentially rates at which banks are lending each other money on the money markets. So when we're looking at swap rates and the behaviours there, these have been travelling up, and in the last week they have spiked again. They actually hit 2.8% in the last week. And what's happening here, in very broad terms, I'm not going to go into the real kind of minutiae of this, but in broad terms, in the money markets, people are saying, well, I'm going to lend you money, I'm going to fix it for you over 5 years. I want to make sure that over that 5-year period, we're not going to lose money. We're going to be lending at a point where we make a margin comparative to interest rates, i.e. base rate and SONIA. But what we also want to make sure is that our deal remains competitive enough that people are actually going to want to do business with us. Otherwise, someone else will undercut us and we'll lose the deal. So swap rates are essentially longer-term fixed rates being priced in a way to kind of take into account the expectation of base rate movements over that period of time. So the fact that 5-year swap rates have moved up in the last week really tells us that the people in the money markets are expecting base rate to continue to rise or go up not insignificantly over a 5-year period. So the message here really is, please do not wait until the next Bank of England base rate meeting, which is in August, to suddenly decide to do a remortgage, because the way the fixed rate pricing works in the mortgage market is it's really decided in advance of base rate movements. So if by the time you wait for base rate movements to be announced, you've already missed the deals, they've already gone, they've already been repriced. So in terms of the base rate meeting in August, actually, if you were to be thinking along the lines of that you're going to need a mortgage in the coming months, I'm just going to wait until August and nick it at the last minute before the base rate or the Bank of England has its meeting, you've left it too late. You really need to be making these decisions well in advance of the Bank of England meeting. More information has been published with regards to the Renters Reform Bill, and I'm just going to run through each of the key points one by one and just give you some kind of thoughts on those. So first of all, the Section 21 no faults eviction ban. Now, we've been talking about this for a long time. I'm not going to tell you anything that you don't already know. So just to kind of summarise, and this is the most contentious reform. When we talk to landlords, this is the one that they're most angry about, the one they're most concerned about. So the White Paper has confirmed a ban on Section 21 no-fault evictions intended to protect tenants from unfair evictions, such as a landlord punishing them for making a complaint about, I don't know, disrepair of a property or something. So the change means that landlords will have to give a good reason for ending a tenancy. Now, the government wants to ensure that landlords can regain possession of their properties from antisocial tenants or if they want to sell. But landlords are now really worrying that it's all going to make the already lengthy process of repossession even more challenging and expensive. Now, when we're talking to our clients about this, and what they're saying is, look, you know, I might just want to get my property back because I want to sell it, but also because I might want to move back into it myself. I might want to let a family member move in. Those things, both of which, incidentally, are not allowed under the terms of a buy-to-let mortgage. You have been warned. But just, you know, as a kind of aside, not all landlords have buy-to-let mortgages. There's loads and loads of unencumbered buy-to-lets out there. And actually, fundamentally, landlords are of the kind of view that this is my property. If I want to have it back and I'm reasonable about it, I should be allowed with fair notice just to be able to get my property back. So this is the one that's really set the cat amongst the pigeons. Now, there is more granular detail yet to be confirmed. So there is a possibility that actually once everything's kind of laid out in black and white, maybe it won't be quite as horrifying as it first seems, but this is where we are at the moment. Now, the next one was the decent home standards. This is already in place for social housing. So the government are essentially extending the decent home standard for the private rental sector, and the aim is to address the 21% of private rental sector property deemed not decent to ensure that all tenants have safe, comfortable homes of good quality. So this is essentially about making sure that things aren't damp, that there's kind of no electrical risks, all that kind of stuff. So making sure that people have decent quality homes. Now, I know that the 99% of landlords, all of our clients, have really good quality properties. And actually for these guys, there's nothing to worry about because they take pride in their product, in their service, offering good quality homes to their tenants. But there is, unfortunately, a contingent of landlords who do rent out and let properties which are of substandard condition, potentially can be sort of causing health issues, for example, to tenants. So this is the kind of people this is aimed at. So if you have good quality stock, genuinely, I don't think you have anything to worry about here. Now, another interesting one is rent reviews. So tenancy agreements will no longer be able to include rent review clauses. So these are set at intervals which landlords can review and change the rent to reflect the broader economic climate. Landlords will need to give twice as much notice of a rent increase. It's currently 1 month, it's becoming 2, giving tenants longer to challenge unjustified increases and prepare financially. Tenants will also be able to claim back rent paid on non-decent homes. So what we're saying here essentially is that if you are going to do a rent review, you need to give your tenant 2 months notice rather than 1 for any increase in payments. And actually just know that if the property is classed as non-decent, tenants will be able to claw back rental as well. There's also going to be a private renters ombudsman, which is a service which will enable landlords and tenants to settle disputes outside of the usual court system. So essentially an arbitration structure is going to be put in place. And it's intended to make the process for these cases quicker and less expensive. So this actually, to me, as far as I'm concerned, is a really, really good thing. If you've got an independent body who's settling disputes amongst people rather than having to go and thrash it out in courts, which is, taking anything to court is very, very costly, can be incredibly time consuming. Actually having a much quicker arbitration scheme should be a really, really positive thing. So I think this is a kind of thumbs up for that one. The property portal has also been kind of confirmed. This is a portal which aims to protect tenants and allow landlords to take recognition for providing quality homes. Now, the property portal is an interesting one. So essentially, it's going to be a database of landlords. And this information, this is where I think we can see some kind of contentiousness coming in. So essentially, each landlord will have a reference number. So if you were viewing a property to rent on Rightmove, that property would have a reference number, which is essentially the landlord's reference number. You can then link into the property portal, find your landlord and check there's nothing kind of contentious written about them. They have essentially permission by being on this portal to rent property, i.e. you're not going to be dealing with someone who's not kind of a recognised landlord. Now, the thing that, when I read this, really kind of shook me is that the landlord's private address is going to be published on this database. Now, a lot of landlords won't mind their tenant having their address because when you sign a tenancy agreement, often your address is also on that tenancy agreement, so you can see that. But a lot of landlords, and I'd be one of those, I manage my property through an agent, so I'm actually fairly anonymous to my tenant. My agent is a professional business. They look after the running of the property. I have no day-to-day involvement in it at all. And yet still, that tenant is going to have access to my private information. I've got nothing to hide, but I just think, I don't understand necessarily why that is relevant. And some landlords will be very uncomfortable with this. Now, the other thing with the property portal is really the kind of information that can be provided on there. People can be struck off from this sort of approved list of landlords because of arguments, disagreements with tenants by not doing things appropriately. And if you're struck off from this list and essentially you're no longer allowed to rent properties, it's almost like it's a register of landlords. If you're not on the register, you shouldn't be letting properties. It can become illegal to do so. And what is not clear at this stage is actually what means you could be struck off from the portal, from the list of kind of acceptable landlords, how that happens. Now, I'm guessing this is potentially where the private renters ombudsman may come into play. You've got this kind of arbitration scheme sort of overlaying all of these kinds of features, and there would be something in place to ensure that tenants can't simply make a really derogatory comment about their landlord and then the landlord is struck off the list. I'm sure it's going to be much more measured than that, much more controlled. But at the moment, we don't have that information, and I think this is going to make a lot of landlords feel incredibly apprehensive until they have the real detail of how this is all going to work. Now, lastly, blanket bans on tenants. So landlords will no longer be able to ban families with children or those on housing benefits from renting their properties. Now, I have never come across a landlord who has said that they will not let their property to people with children, ever. I'm sure they do exist, otherwise this wouldn't be coming up. But, I feel this is going to impact like the tiniest fraction of landlords. Likewise, landlords not wanting to lend to those people on housing benefits. Now, it used to be that landlords would not let to tenants on housing benefits because the terms and conditions of their mortgage precluded them from doing so. There was a case that went to court, and actually on the back of that, we as Mortgages for Business really pioneered this cause and managed to get a large number, or actually the majority of buy-to-let lenders, to remove that condition from their mortgage offers. So people are now able to let to people on housing benefit. And once, a bunch of these did it, everyone else just followed suit. So I suppose the key message here is that if you are concerned that by having to be open to letting to people on housing benefit, you're breaching the terms and conditions of your mortgage, actually things have moved on a bit, you should be okay. And lastly, pets. Landlords will have to consider tenant requests for keeping pets and cannot unreasonably refuse. Now, personally, as a landlord, I don't have a problem with people having pets in my property. I'm a a dog owner, so I actually really like having pets in the house, and because my dog is well behaved and doesn't chew the carpet, I'd like to assume that my tenants would make sure it was the same situation. Not every single landlord has had the same experience with pet owners. I do know that. We do hear, obviously we come across lots of landlords and there are some real horror stories out there. But I think it's great that actually, just as a matter of course, no pets would be not acceptable, but actually be able to give a reasonable, explanation about why that is not acceptable is largely fair enough. However, what we don't yet know is actually what would constitute unreasonable or a reasonable refusal. So again, this is another one where the headlines are out, everyone's there scratching their heads thinking, well, what does this actually mean? So that is as much information as we have, the latest on the Renters Reform Bill. I do think there are actually some positives in there. I do think that some of this sounds probably slightly worrying, but actually once we get into the detail, once it's finally published, it probably won't be quite as bad as one would be forgiven for thinking. If you imagine, this is largely being sort of crafted for protection of renters, and so the kind of headlines as this gets released is going to be more geared up towards kind of like making renters feel good about things. But actually once we get into the detail, actually the benefit to the landlords will come out later. I think this is sort of a kind of spinning exercise, if nothing else, from the government. And that is us for this week. Have a wonderful weekend. Stay cool. If you do have any questions, we'd love to hear from you. 0345 345 6788. Have a look at our website, mortgagesforbusiness.co.uk. I will catch you again same time next week. But as I mentioned, please do not wait for the base rate to go up if you do need a remortgage in the next few months. Now is the time. Lenders' pricing is only going one way. Incidentally, we have been informed of numerous lenders who are putting their pricing up next week. So we've had a wave of them this week. The other kind of contingent are going next week. So the time is absolutely now. Have a great weekend and I'll catch you next time.